Do you know who Jan Hatzius is? Well, you probably don't, but I'll bet you know who Goldman Sachs is. Jan Hatzius is the chief economist for Goldman Sachs. Now, recently he made news when he said the U.S. economy was potentially approaching stall speed and that slowdown risks were rising. Now, this may come as a surprise to many people who have heard that the U.S. economy is doing well, and right now, it is doing well. Most of the economic data is solid. But there is a loss of momentum, and that's likely the reason that the Fed is going to cut rates in September and potentially 2 more times this year. So the question investors need to ask themselves is, do Fed rate cuts matter enough to stop an economic slowdown? Now, the problem with Fed rate cuts and Fed policy changes is that it takes time to impact the economy, usually a minimum of 6 months. So if the Fed cuts rates in September, which they will, we will likely not see the impact of that until March. Now, if the economy slows dramatically between now and then, that's a problem, and you'll see recession risks rise. That's not the more likely outcome. In fact, the U.S. economy is doing well, although it does face many headwinds. Markets are richly valued. They are just off all-time highs, and they are not pricing in much of a chance of an economic slowdown. That's a risk for all of us because if we get what I call a growth scare in the coming weeks, you will see the market have to price in a greater chance of a slowdown, and that will mean a sharp, potentially painful pullback.